Hello and welcome to the look ahead for Thursday, the 12th of June, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we're going to be watching out for UK GDP in the European session. There are also plenty of ECB officials speaking. In the US session, we'll be watching out for PPI inflation as well as US jobless claims. So let's just start with with UK GDP data. Now, expectations are for UK GDP to actually contract in April. We're looking at GDP of minus 0.1%. That comes after growth of that's month on month in April. That's after 0.2% growth in the previous month. It also comes after we saw a very strong first quarter with growth at 0.7% ahead of forecast. But expectations are that that is a one-off, and we're going to see growth slowing across the year. That was the pull forward as a result of sort of concerns ahead of Trump's trade tariffs. So growth is expected to slow, and we're expecting to see that starting to come through in this data. Data also comes after we saw UK jobs data this week was weaker than expected, and highlighted concerns, or sort of growing concerns over the health of the UK labour market. Unemployment rose to 4.6%. We also saw that the number on payrolls fell by 109,000. That was the largest decline, so the weakest number we've seen since COVID. So there are definitely signs of weakness coming through. Now, the data tomorrow also comes as Rachel Reeves laid out her spending review today with £2 trillion in public expenditure. Now, she showed sort of support for key sectors, but the plans also confirm that there is limited fiscal headroom, and this is increasing the likelihood of tax hikes later in the year. Now, this is the pound US dollar that we're looking at. There is some support that we're finding here from expectations that the Bank of England won't be cutting interest rates when it meets next week. However, the Bank of England is still expected to cut rates twice across the remainder of the year. Now, if we do see this weakness in GDP data, that could obviously pull the pound against the US dollar lower. The pair is currently trading between the one caught here. We can see it on the upside by that 136 level that we saw last week on Thursday, and then we've got some support here around the 134 level. So it's just trading in a consolidation pattern. The broader trend remains up. However, we are starting to see some bearish divergence with the RSI. So, I mean, whilst there are no firm signs or concrete signs of a reversal at the moment, it is just worth being aware that momentum does appear to be fading. Still, if we get stronger than expected GDP data tomorrow, then we could see 136. That's the level to be watching on the upside. Level to be watching on the downside, 134.30. That was the high that we saw back in September 2024. That would be the level to watch on the downside for a break below there to create a lower low and head towards the 133 level. Also, as I mentioned, we do have US data as well to be watching out for. But before we get on to that, let's just have a quick look at what's going on with the FTSE, because the FTSE has seen pretty phenomenal rally. We've been watching this relatively closely over the last couple of weeks. It appears to be closing in on its all-time high of 89,010, which was reached back in March at the beginning of this year. So we've seen a strong rally. Obviously, this is being supported by particular stocks. We've seen defense stocks have done well. Miners have been helping since we've had that news of a sort of US-China trade framework deal, which has helped the mood as well. And we're seeing this, the index push towards that all-time high. Hopes of further Bank of England rate cuts as well is going to keep that supported. So that's what we're watching out for. Rise towards that level. Above there, it's blue skies. So look towards 9,000 as the next logical level. On the downside, you're finding support around the 8,800 level, and then below there we'll be looking around the 8650. Then finally, let's also just take a look at the S&P 500. As I mentioned, we've got US data tomorrow. We've got PPI inflation. Now that's expected to hold steady at 3.1% month on month. on a year-on-year. On a monthly basis, it's expected to increase 0.3% after falling 0.4% last month. So this could be some sign again of sticky inflation. Although we did have a factory gate level, but we did have inflation data out today from the US, and it was a little bit weaker than expected. It rose by less than expected to 2.4%, up from 2.3%. I think the market is looking at this data, but there's still an element of caution here. I mean, there is some sense that perhaps companies are absorbing those extra costs from Trump's trade tariffs, or that they're still benefiting from the increase in inventories prior to the tariffs. They're not needing to pass on those costs, but expectations are that if Trump tariffs, particularly the reciprocal tariffs, come in July, then we could see inflation increase quite significantly. As far as levels are concerned, this is the S&P 500, almost trading at all-time highs. We're not far off it. We've managed to push above that key 6,000 level, and next level to be watching out for is 6130. That is the record high on the upside. As I said, we've seen China and the US agree the framework for trade deal, which is going to see those rare earth minerals, which have been very much a hot subject or topic for Trump, coming into China has agreed to continue the supply of those. So we're seeing those gains. As far as support to be watching on the downside, 6,000. If we get, for example, a sharp increase in jobless claims, or that could be something that the market will be watching closely, given that we've seen that increase in jobless claims last week, which just unnerved the market a little bit. So that's what I would be watching for, given that inflation data is out today. I mean, it would take a big jump up in PPI, I think, to unnerve the market. So that is everything from me. I hope you've liked what you have, and if you watched here, and if you have, then please do give this video a like, and for more videos like this, please do subscribe.